Hello everyone, my name is Advait Italia and today I'm back with the other market update video in which I discuss the current market action, my insights and my learnings from today and also what I think about the future. So without further ado, let's jump on to the analysis. So as you know, I do weekly, daily and then intraday analysis and then I share my strategy for tomorrow. So let's start with the weekly analysis as we start a very fresh week today. So in the today's weekly analysis, I want to discuss one important development of today. Today we entered the chop zone that we have been discussing since last so many days. So let me show you what do I mean. So over here, as you can see in the green bar, over here we have today, this is the first day of the week and we have entered into again the golden ratio of the Fibonacci series and we have entered again into this chop range. So I have drawn this green range and please make sure that until and unless we don't conclusively break out of this range, it is very difficult to figure out the direction of the markets. Today, this week is going to be very pivotal week. Why? Because this week we have Apple earnings, which is probably the only large company that is left. We have Microsoft, Google, Meta, all the earnings have finished, Amazon last week. So most of them reported a very good quarter, growth in the revenue, growth in the top line, bottom line, everything. So I'm just waiting for the Apple earnings. And the next thing that I'm waiting for is the Fomc conference this week. So Jerome Powell is going to decide if he's going to keep the rates steady as it is, or is it going to be higher. 99% it is going to be as it is. So markets are going to react in a positive way, thinking that the rate hike has been paused. So I'm just looking for the indication over here that the reaction to those events, are we going to break out of this range on the top or we are going to break down on this range from the bottom. So as long as we are in this range, we are again in the chop zone. So on the weekly time frame, we have not yet touched the 50-day moving average, that is the cream line. We are only hovering at the lower end of the Bollinger Band on the weekly basis. So this is my analysis on the weekly time frame, that is we again entered into a chop zone. Now remember, this is just the first day of the week, so this bar needs to close in order for us to get any conclusion out of this, but I'm just reporting the status as of today. So now let's jump on to the daily time frame. So in the daily time frame, I wanted to emphasize on three different things. One is we have still not given up the 200-day moving average. Second, we are still having the next support zone as S2, and the third, we today tested the top of the range, that is the 5-day moving average. So let me show you everything. What do I mean over here? So this is my daily charts, as you can see. So in the daily charts over here, we lost the 200-day moving average on Thursday. We quickly reclaimed it on Friday, and today we gapped up in the markets and we tested the top of the range. So what do I mean when I say we tested the top of the range? Remember, this is where we lost the 150-day, and for us to go higher or for us to be really bullish, the first thing that we need to do is to conquer the previous day's high. So as long as we close above the previous day's high, then the next step should be, how can we close above the entire range? So this is the entire range, and it seems like today we are going to close above this range. So I'm just waiting, so today, as you can see, we tested 5-day moving average 2 times. So in the first half of the session and also right now as well. So the daily analysis still suggests that we are bullish as of now. Now, considering that normally the bottom formation happens in a W formation. So if you can see my mouse very acutely, normally what happens is the W needs to form like this. W needs to form in order for us to have a conclusive bullish trend. So right now we are in the middle of the W formation. So I'm also kind of very suspicious that in the coming 2 to 3 days, we will get a final washout and then we will start building forward. Forward meaning bullish. So that flush out may be happening due to the Apple earnings. That may happen due to the speech of Powell in which he can be really hawkish. So whatever the trigger may be, I am just looking for a washout, initial washout, like testing the 200-day again, or testing the Bollinger Band again, and then moving forward. Because look exactly what happened a few days ago. So we were going down and we had 2 green days, and everybody thought that, hey, now we are out of the woods and now we should be bullish. And look what happened over here. So I'm just the same formation, almost the same formation is happening over here and over here. So what I am looking for is a W formation that is like this, and then like this, and then like this. So once that W formation happens, for that the initial washout should happen over here. So in 2 to 3 days, I am pretty suspicious that we will test the 200-day moving average again, and then we can be conclusively bullish. Then we can be having good confirmation from bullish side. So for now, on immediate basis, this is what I think. So do I trust this bounce very 100%? Absolutely not. So why? Because we need an initial flush out for us to go higher. At least a W formation will give me a better sense of probabilistic win. So that's my take on the daily side. And remember, we are almost closing this month, so the new pivot levels will get refreshed. So these pivot levels may not hold or may not be as important as it is right now. So that's my take on daily analysis. So now let's jump on to my favorite section, that is the intraday. So in the intraday, the most important thing that we did today is testing the 5-day moving average. And we did that in a very start of the session, that is almost in the first to second hour. So let me show you what do I mean. So as you can see over here, this is the 5-minute candle chart. And then we started at 6:30 and we have went to till 470, almost 473. And if you can see, that exactly corresponds to the 5-day moving average, that is 455. So intraday, we tested the 5-day moving average and we quickly got rejected over there. Remember, we had a very big gap up opening today, almost of 0.6 to 0.8%. So over here, as you can see, we chopped around, the entire day. And then again, the most good thing that happened today is the recovery happened in the second half of the day. As you can see over here, the buying came in the last 2 hours and we survived this session pretty nicely. So my take on the intraday is, as we knew that today the 5-day would be tested first. So normally what I did is I shorted at the 5-day and look what happened. It perfectly gave me a very huge move. Obviously, I was not able to capture the entire move. I got out of 15-20 points. But my point over here is, here there was a really nice quality trade in which the first touch of the 5-day moving average would be obviously rejected. So when we are going on to conquer the supply zone over here, the first touch always gets rejected. That's the I'm speaking it from the experience. So this was a really, and also we were approaching the R1 pivot level on the intraday basis. So there was a lot of probabilistic good value in shorting over here. And then since the entire day, as you can see, this entire bundle of moving averages, the price only hovered around it. And once we got the conclusive cutover, like we got a bullish crossover, conclusive bullish crossover over the R1, we consolidated for a few candles and then we rallied again. So in intraday, as you can also see on the VIX kept on going lower. It never reclaimed the P0 level, and since then it just kept on going lower. So VIX was also a good indication. Also, the moving averages, the bundle of moving averages was a good confirmation. And the biggest confirmation was the daily chart. Like we tested the 5-day, and then on the lower end, I was prepared for testing the 200-day, which never got tested, by the way. So the price action was fairly straightforward. If you see the intraday today, very much expected. If you have seen my pre-market analysis video, I exactly posted this range. So stay tuned for the pre-market analysis as well. well if you are a really, active day trader and you want these levels in advance. So I discussed these levels in advance in the pre-market video. So that's my take on the intraday. I don't know till how long these levels are going to hold, but as of now, looking at the volume, it is pretty reasonable. 655,000 contracts in a day, so pretty reasonable bounce. But as I said in the daily market update, I think we will test an initial flush in 2-3 days, and let's hope for there. Let's hope that would be a really good buying opportunity. And that's my intraday take. And with that, let's conclude. One other thing that I wanted to discuss is the economic calendar, because we have a lot of a big news event coming. So tomorrow, as you can see, there is a house price index, there's Chicago PMI, consumer confidence is going to be very important news. So tomorrow's session, do not trade until first 45 minutes or first half an hour, since consumer confidence is going to get released on 7 o'clock Pacific time, and 7:30 is going to be Dallas Fed survey. So I think there will be a lot of value. The market is actually on a summary. It is waiting for the two news events that I told you earlier in this video. Once that gets over, it will have a really good clarity, and then the next leg of this market is going to get decided. So until then, we need to be patient, we need to be calm, and let's see where it goes, and keep learning, keep growing, and please follow, like, share, and subscribe. Thank you.